The stock market is a casino, unless you play the house.
Welcome to the stock market casino, where most retail investors walk in thinking they are financial geniuses, and walk out broke, confused and crying into their empty wallets. If you have ever bought a stock because a friend told you it was going to the moon, congratulations, you were basically playing roulette with your money. But here's the uncomfortable truth. The market is designed to make you feel like you are winning, until you are not. Wall Street loves when you think you are the next Warren Buffett, while you are actually just another tourist at the blackjack table. In this video, I will show you exactly why the stock market looks like Vegas, the dirty psychological tricks that make most investors lose, and most importantly, how you can flip the odds and play like the house instead of the gambler. Stay with me until the end, because once you see how the game is really played, you will never look at investing the same way again.
Why most investors gamble like drunk tourists in Vegas?
Let us be brutally honest for a moment. Most retail investors do not act like disciplined professionals. They act like drunk tourists who just landed in Las Vegas, already holding a plastic cup of watered-down margarita and convinced that tonight is their night. You know the type. They stumble into the casino, find the loudest slot machine, and push the button over and over, hoping that flashing lights will somehow translate into a Lamborghini. That is the exact same logic many people use when they open a trading app on their phone. The psychology is identical. In Vegas, the tourist believes he is due for a win. In the stock market, the rookie investor believes that just because Tesla or Amazon went up yesterday, it must go up again today. This is not investing. This is gambling, dressed in a suit and tie. And the odds are just as brutal. Hot stock tips are like the roulette table. How many times have you heard this? My friend told me this stock is about to explode. That phrase is the financial equivalent of, I have a system for beating roulette. Nobody has ever consistently beaten roulette. Nobody consistently gets rich chasing hot stock tips. But people keep trying because hope is intoxicating. The roulette table is designed to keep you entertained while quietly draining your wallet. The stock market does the same thing to the unprepared. Your trading app sends you notifications that look like jackpots. This stock is up 10% today. Ding, 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 but it never reminds you of the times you lost 20%. Just like the casino, the house controls the spotlight. Then there are the penny stock gamblers. Here is a fun fact. Penny slots actually have some of the worst odds in the casino. And penny stocks are the same story. Sure, there are a few rare cases where someone hits the jackpot. But for every lucky winner, there are 1,000 losers who just keep feeding the machine. Another classic casino scene. The tourist who thinks he can outsmart the blackjack dealer. He has read half a book on card counting, had 3 cocktails, and suddenly believes he is a genius. Most retail investors act the same way when they watch 2 YouTube videos about technical analysis. They see a chart, they draw a couple of lines, and they are convinced they can time the market better than the professionals with billion-dollar algorithms. Spoiler alert, they cannot. Wall Street is the casino dealer, and you are the tourist. The dealer has seen every trick, every bluff, every overconfident gambler who swore he had an edge. In the end, the house does not care about your theory. The house only cares about the math. The math says the house wins. Casinos are masters at distraction. They hand you free drinks, free buffets, and make you feel like a VIP while your wallet gets thinner by the second. The stock market has its version of free drinks too. Think about commission-free trading apps. Sounds amazing, right? Free trades. But nothing is ever free. If you are not paying with money, you are paying with something else, usually your attention, your data, or worse, your poor decision-making. Those apps make it easy to press the button again and again, just like a slot machine. The dopamine hit from buying a stock feels like pulling a lever. And just like in Vegas, you keep playing because you believe the next spin will finally be the big one. Here's the punchline. The average retail investor is not actually investing. He is gambling in a giant casino where the house has better odds, better information, and better psychology. And just like in Vegas, if you play long enough without a strategy, you will eventually walk away broke. But here's the difference. In Vegas, you can at least walk away with a funny story about how you lost $500 in 5 minutes. In the market, you might walk away with your retirement savings gone, and that is not nearly as funny. So if you recognize yourself in any of these casino comparisons, the drunk tourist at the slots, the overconfident blackjack player, the roulette dreamer chasing hot tips, do not feel bad. You are not alone. Millions of people do the exact same thing every day. That is why the house keeps winning.
The hidden tricks Wall Street uses to take your chips.
Casinos do not just rely on luck, they rely on psychology. Every flashing light, every sound effect, every carpet pattern is designed to keep you playing, keep you losing, and keep you smiling while it happens. Wall Street is no different. In fact, the stock market has perfected the art of making you feel like you are in control, while quietly stacking the odds against you. If you think this is about supply and demand or free markets, think again. The financial industry has more tricks up its sleeve than a magician at a cheap Vegas show. And if you do not recognize them, you are the one sitting at the table with a goofy grin while your chips slowly slide across to the dealer. In a casino, the house edge is baked into the game. Roulette has 0 and double 0. Blackjack has the dealer advantage. Slots are programmed to keep your winnings just below break-even. On Wall Street, the house edge is information asymmetry. Institutions have access to research, analysts, and insider data that you will never see. They have algorithms trading in milliseconds while you are still refreshing your screen. It is like playing poker when your opponent can see your cards. You might get lucky once in a while, but in the long run, you are doomed. Casinos overwhelm you with choices. Roulette, blackjack, poker, craps, thousands of slot machines. It feels like freedom, but the odds are stacked no matter what you pick. The stock market does the same thing. You open your trading app, and there are thousands of stocks, ETFs, options, crypto tokens, even fractional shares. It feels empowering, like you are a financial mastermind with infinite possibilities. But the truth is, most of those opportunities are just different colored slot machines. You think you are being strategic, but you are still inside the casino. And the noisy jackpot? Ever notice how in a casino, when someone wins big, the lights flash and bells ring? It makes you believe winning is common. What you do not see are the hundreds of silent losers around them. The market does the same thing. When a stock explodes, it is all over the news, Twitter, TikTok, and YouTube thumbnails with rocket emojis. You see the jackpot? What you do not see are the countless investors who bought too late, held too long, or sold too early. Wall Street loves to broadcast the winners because it keeps the losers playing. And the free buffet of media hype is not free. In Vegas, the buffet looks free. You pile your plate high, thinking you beat the system. In reality, you paid for that buffet 10 times over at the blackjack table. Financial media works the same way. CNBC, Bloomberg, Twitter gurus, they feed you an endless buffet of hot takes, breaking news, and expert predictions. It feels like you are getting valuable insight, but most of it is junk food for your brain. The more you consume, the more overconfident you become, and the easier it is for the house to separate you from your chips. Casinos know your emotions are their profit engine. They use bright lights to excite you, slow dealers to frustrate you, and free drinks to lower your defenses. Wall Street uses the same emotional levers. Fear of missing out, FOMO. This stock is going to the moon. Get in now. Fear of loss. The crash is coming. Sell everything before it is too late. Greed. If you had invested $1,000 10 years ago, you would be rich today. Regret. If only you had bought Apple in 2001. Every emotional trigger is another lever pulling chips out of your pocket. Professionals understand this game. Retail investors rarely do. In poker, if you sit down at a table and cannot figure out who the sucker is, it is probably you. On Wall Street, retail investors are the suckers by default. Hedge funds and institutions literally design strategies to profit off your predictable behavior: panic selling. Chasing hype, buying high, and selling low. It is not illegal, it is just the game. But make no mistake, because the table is tilted. When you think you are playing against other small traders, you are wrong. You are actually playing against professionals who studied your every move. Casinos never have clocks or windows. They want you to lose track of time so you keep playing. Your trading app is the same. Push notifications, price alerts, and trending tickers. It is digital daylight control. You do not notice how many hours you waste chasing moves until your money is gone. The greatest trick the casino ever pulled was convincing gamblers that they could beat the system. Wall Street has done the same. Docs, courses, secret indicators, YouTube gurus. They all whisper the same seductive message. you can win, just like me. But the truth is simple. If you play the game like a gambler, you lose like a gambler. The house edge never goes away. The only way to win is to stop being the tourist and start thinking like the house.
How to stop playing slots and start playing like the house.
At this point, you'd probably realize that most investors are the drunk tourists of the financial world. They are pulling levers, chasing jackpots, and leaving the casino broke. But here's the good news. You do not have to play like them. You can flip the script. You can move from being the gambler to being the house. Casinos never cry when tourists leave with a lucky jackpot because they know that over time, the math always brings the chips back. The same principle works in the market. If you position yourself like the house, you can turn the odds in your favor. Once you see how it works, you will laugh at how you used to play penny slots with your hard-earned money. Lesson 1. Play long-term games. Not quick spin slot machines are designed for instant gratification. Pull the lever, lights flash, you win or lose instantly. That is exactly how most retail investors treat day trading. Quick, flashy, exciting, and almost always a slow drain of money. The house does not care about quick spins. The house cares about the long game. In investing, the long game is compounding. Real wealth is not built in a week or a month. It is built over years and decades. That is why boring strategies like index funds, dividend reinvestment, and dollar-cost averaging outperform flashy trading in the long run. They are not sexy, but they are effective. The slot machine gambler wants fireworks. House wants consistency. Guess who wins? Lesson 2. Control the table. Do not chase it when you sit at a blackjack table. The dealer is in control. Sets the rules. He shuffles the cards. He dictates the pace. If you want to play like the house in the market, you need to set your own rules too. That means having a clear strategy before you even buy a stock. What is your entry point? What is your exit point? How much are you willing to lose before you walk away? How much profit is enough? Without these rules, you are just chasing the table like a drunk tourist trying to double down on bad hands. The house never chases. House dictates. Lesson 3. Collect the rake, not the jackpots. Well, in poker, the casino does not gamble with the players. The casino just takes a small cut, called the rake, from every pot. It does not matter who wins or loses. The house always gets paid. As an investor, you can play the same game. Instead of trying to guess the next jackpot stock, focus on systems that let you collect steady returns no matter what. Dividend stocks, covered calls, and even boring index funds let you earn the rake, while others fight over the pot. Tourists dream about jackpots. The house dreams about guaranteed small wins stacked over and over until the pile is massive. Lesson 4. Manage risk like a pit boss. Casinos do not let drunk tourists bet their house on a single hand of blackjack. There are betting limits, surveillance cameras, and pit bosses making sure the risk never gets out of control. Investors should think the same way. Never go all in on one stock, one trade, or one idea. Diversify. Set stop-loss orders. Protect your capital like a casino protects its chips. The house knows that losing streaks happen, but the rules are designed so they never lose the entire casino in one bad night. Do you have the same discipline, or are you still the guy at the slot machine putting rent money into flashing lights? Lesson 5. Patience is the ultimate house edge. Tourists come to Vegas expecting instant wealth. The house plays a different game. Slow, steady, inevitable. The house is patient. It knows time is on its side. The same is true in the stock market. Investors who try to get rich overnight almost always end up broke. Investors who play the long game, reinvest dividends, let compounding do the heavy lifting, are the ones who retire wealthy. Patience may sound boring, but boredom is the secret weapon of the house. Playing like the house is not about being the smartest person in the room or finding some secret stock nobody else knows about. It is about discipline, consistency, and controlling the game instead of letting the game control you. Tourists chase jackpots. The house collects steady income. Tourists bet emotionally. The house follows rules. Tourists want excitement. The house wants inevitability. The choice is simple. You can keep gambling like a tourist and eventually walk out broke. Or you can step into the mindset of the house and let the odds work for you.
The psychological traps that make you lose before you even start.
Here is the harsh truth. You do not lose in the stock market when you buy a bad stock. You lose long before that, inside your own head. Your brain is wired for survival in the jungle, not survival on Wall Street, and the house knows this. Just like casinos study human psychology to keep tourists gambling, Wall Street studies your mental weaknesses to keep you feeding chips into the system. If you think you are a rational investor, think again. You're not. You're a walking collection of biases, emotions, and shortcuts. And if you do not see the traps, you will step on them every time. Trap 1. The FOMO roulette wheel. Fear of missing out is the loudest roulette wheel in the casino. You see it spinning. You hear the cheers when someone hits a lucky number, and suddenly you cannot resist putting chips on the table. In the market, FOMO shows up every time a stock skyrockets. Social media screams, "This stock is going to the moon." And you panic buy at the top. You feel like a genius for 5 minutes. Then the stock drops 30%, and you realize you were not early. You were the last sucker through the door. The house loves FOMO because it makes you act fast without thinking. In Vegas, that is how tourists lose fortunes in an hour. On Wall Street, that is how retail investors donate their savings to professionals. Trap 2. The loss aversion slot machine. Humans hate losing twice as much as they like winning. This is called loss aversion, and it is the reason tourists keep feeding slot machines. They already lost $100, so they convince themselves to put in $20 more to get back to even. Spoiler alert, they never do. In the market, loss aversion makes you hold on to bad stocks way too long. You tell yourself, "I will sell when it gets back to my entry price." But it never does. You end up holding a loser for months or years while your money is trapped like a hostage. The house smiles because your stubbornness funds their profits. Trap 3. The gambler's fallacy, blackjack table. Tourists at the blackjack table say things like, "The dealer has won 5 hands in a row, I am due for a win." That is the gambler's fallacy, the belief that past events change future odds. It is wrong in blackjack, and it is wrong in the market. Retail investors fall for it when they say, "This stock has been going down for months. It must bounce soon." No, it must not. Stocks do not have a sense of fairness. The market does not owe you a win. Just like the dealer, it does not care how many times you have already lost. Trap 4. The overconfidence poker table. In poker, the loudest guy at the table, the one bragging about how smart he is, usually leaves broke. Overconfidence kills gamblers, kills investors too. After 1 or 2 lucky trades, beginners start believing they are geniuses. They increase their bet size, start trading options, maybe even use leverage. And just like the tourist who thinks he can bluff his way through a poker tournament, they get crushed by professionals who have been studying the game for decades. The house feeds on overconfidence. It wants you to think you are special right before it empties your wallet. Trap 5. The confirmation bias buffet. Casinos serve buffets with endless options. You take what you like, ignore what you do not, and convince yourself you made a great meal. Investors do the same with information. This is called confirmation bias. If you believe a stock will go up, you will find a dozen articles, videos, and Reddit threads that agree with you. You will ignore the warnings, the risks, and the negative signs because your brain wants to be right more than it wants to be rich. And while you are enjoying your confirmation buffet, the house is cashing out. Trap 6. The sunk cost craps table. Craps tables are loud, chaotic, and full of energy. People throw dice, lose money, and keep playing because I already put so much in, I cannot stop now. That is the sunk cost fallacy. Investors fall for it when they keep pouring money into bad ideas. I already invested $5,000, I cannot quit now. Yes, you can. Quitting a bad investment is not losing it, is cutting your losses. But the sunk cost trap convinces you to stay until you are completely wiped out. But why these traps work so well? These traps work because they are not bugs in your brain. They are features. Your brain evolved to avoid lions and find food, not to analyze candlestick charts. The house knows this. Casinos use psychology to drain tourists. Wall Street uses psychology to drain retail investors. And until you admit your brain is part of the problem, you will always be the sucker at the table. The first step to escaping the traps is awareness. Once you recognize FOMO, loss aversion, overconfidence, and all the other traps, you can pause before acting. The house wins when you play emotionally. The house loses when you play strategically. The truth is simple. The market is not fair, but it is predictable. Not predictable in stock prices, but predictable in human behavior. And if you stop acting like a tourist, you can finally stop feeding chips into the system.
The simple strategy that flips the odds in your favor.
So far, we have exposed the casino tricks, the psychological traps, why most retail investors act like drunk tourists in Vegas. Now, it is time for the fun part. The part where you stop being a tourist and start acting like the house. Because yes, it is possible to flip the odds. You just need the right mindset and a strategy so simple that most gamblers overlook it. The house does not win because it is smarter. The house wins because it has structure, discipline, and patience. You can do the exact same thing in the market. Let us break down the steps that turn you from a slot machine addict into the guy who owns the casino. Step 1. Stop looking for jackpots. Start looking for edges. Gamblers dream about jackpots. The house does not. The house dreams about consistent edges, even tiny ones that compound over time. In the stock market, your edge is not guessing which stock will explode tomorrow. Your edge is playing the long game with strategies that have worked for decades. Index funds for broad exposure, dividend reinvestment for compounding income. Dollar cost averaging to smooth out volatility. It is boring, but that is the point. Boring works. Boring builds wealth. Jackpots make you broke. Step 2. Build rules, not excuses. Casinos have rules for everything. Betting limits, maximum payouts, security cameras. Why? Because rules protect the house from disaster? You need the same thing in your portfolio. Before you buy a stock, define the rules. How much will you risk? When will you sell if you are wrong? When will you take profits if you are right? Without rules, you make excuses. You hold losers too long. You sell winners too early. You act like a tourist, not like the house. Rules eliminate excuses, and excuses are the currency of gamblers. Step 3. Collect small, predictable wins. Remember how the casino takes a rake from every poker pot? It does not matter who wins or loses. The house always gets paid. You can copy that model. How? By focusing on strategies that produce small, predictable wins, collect dividends, sell covered calls, reinvest gains instead of cashing out early. These are not fireworks, but they stack up like chips on the table. Over time, small, predictable wins destroy the gambler's addiction to jackpots. Step 4. Protect your bankroll like a casino. Casinos do not let you bet unlimited money on one hand of blackjack. That would be suicidal. They spread risk across thousands of players and thousands of games. Investors need the same discipline. Diversify across industries. Hold cash reserves. Do not put 80% of your net worth into a single hot pick. Protecting your bankroll is not cowardice, it is survival. The house never risks the entire casino on one bet, and neither should you. Step 5. Embrace boredom as a superpower. The biggest difference between tourists and the house is this. Tourists want excitement. The house wants inevitability. In the stock market, excitement is expensive. Every time you chase a flashy trade, you pay the house. Every time you sit quietly, reinvest, and let compounding do the work, you are the house. Wealth is not built on adrenaline. Wealth is built on patience. Patience is free, which makes it the greatest edge of all. Step 6. Think like the owner, not the player. Here is the ultimate mindset shift. Stop thinking like a gambler, start thinking like a casino owner. Players worry about their next hand. Owners worry about their long-term revenue. When you invest, do not ask, will I win this trade? Ask, does this strategy guarantee me an edge over time? That is how owners think. They do not care about short-term noise. They care about predictable, scalable, inevitable profits. And the real secret is that discipline beats genius. The market is full of gamblers who think they are smarter than everyone else. Most of them lose. The ones who win are not the smartest, they are the most disciplined. Disciplined to follow rules. It's disciplined to ignore hype. Disciplined to play the long game. That is the real secret strategy. Not magic indicators, not insider tips, just discipline. If you remember nothing else from this entire video, remember this: the stock market is a casino, but you do not have to play like a tourist. You can play like the house. The house does not gamble it, manages odds, protects its bankroll, collects small wins, and lets time do the heavy lifting. Most people will keep chasing jackpots and crying into empty wallets. You will not, because now you know the strategy that flips the odds in your favor. The only question left is simple. Are you ready to stop being the gambler and start being the house?
Tourist or house, the choice that decides your financial future.
So here's the truth. You can keep walking into the stock market like a drunk tourist at 3 a.m., hoping the slot machine will make you rich, or you can finally wake up and play like the house. One path ends with you crying into an empty wallet and telling your friends the market is rigged. The other ends with you stacking chips slowly, consistently, and walking out like the casino owner. The choice is not easy, but it is obvious. If you want to keep gambling, that is your business. Odd. But if you want to build real wealth, stop chasing jackpots, stop believing hype, and start playing the long game with discipline. Because in the end, the tourists always lose, and the house always wins. The only question left is simple. Which one do you want to be?